Welcome to Aurubindo Pharma Q4 FY'24 earnings call. Please note that all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks. Please note that this conference is being recorded. I now hand the conference over to management for opening remarks. Thank you, and
Thank you,
over to
Vandit.
you, sir.
Thank you, Vandit. Good morning and a warm welcome to our fourth quarter FY'24 earnings call. I am Srinivas Dange from the Investor Relations team. We hope you have received the Q4 FY'24 financials and the press release that was sent out on Saturday. These are also available on our website. I would now like to introduce my senior management team on the call with us today, represented by Dr. Satakarni Makapati, CEO of Aurubindo Biosimilars, Vaccines and Peptide Businesses, and Director, Aurubindo Pharma Ltd. Mr. Yugandhar Puwala, CEO of Eugia Pharma Specialties Limited. Mr. Swami Iyer, CEO, Aurubindo Pharma US. Mr. V. Muralidharan, President, Europe Formulation Business, and Mr. S. Subramanian, CFO. We will begin the call with the summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitations, statements relating to the implementation of strategic actions and other affirmations on our future business development, and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties, and other important factors may cause actual developments and results to vary materially from our expectations. Aurubindo Pharma undertakes no obligation to publicly revise any forward-looking statements to reflect in future events or circumstances. With that, I will hand over the call to Mr. S. Subramanian for the highlights. Over to you, sir.
Thank you, Srinivas. Good morning and a warm welcome to our Q4 and full year FY'24 earnings call. This has been a good year of performance across the businesses, mainly driven by volume gains, new product launches, our expansion into new growth markets, and stable pricing. The profitability of the company as well as improved significantly, backed by softening of raw material prices, favorable product and business mix, and improved operating efficiency with better capacity utilization. We had the highest ever sales and EBITDA for the quarter and the year. For the year FY'24, we achieved 29,000 crore of sales, exceeding our internal target of rupees 28,500 crores plus, and achieved EBITDA margin of 20.1% against our guidance of 20%. Now let me take you through the details of the results for the fourth quarter of FY'24 and full year FY'24 declared by the company. For the Q4, the company registered a revenue of 7,850 crores with an increase of 17% year-on-year. The EBITDA before forex and other income grew by 68% year-on-year and by 5% quarter-on-quarter to rupees 1,687 crores. The EBITDA margin for the quarter was at 22.3% and against the 15.5% for the last year, same quarter. Net profit increased by 80% year-on-year and decreased by 3% quarter-on-quarter to rupees 909 crores. The quarter-on-quarter decline was mainly on account of the one-time exceptional loss of 122 crores. For the full year FY'24, the company registered a revenue of 29,000 crores with an increase of 17% year-on-year, supported by growth across the businesses. The EBITDA before forex and other income grew by 55% year-on-year to rupees 5,843 crores. EBITDA margin for the year was 20.1% against 15.1% of last year. Net profit increased by 65% year-on-year to rupees 3,173 crores. In terms of the business breakdown, formulation business excluding Puerto Rico in Q4 witnessed a growth of 21% year-on-year to rupees 6,510 crores and contributed around 86% of the total revenue. The revenues are mainly supported by growth across the growth markets and Europe. For the full year FY'24, formulation business excluding Puerto Rico witnessed a growth of 19% year-on-year to 24,419 crores and contributed around 84% of the total revenue. For the quarter, API business contributed around 13% and the revenue remained flat year-on-year to rupees 1,019 crores. For the full year FY'24, API business contributed around 15% and clocked a revenue of 4,241 crores, registering a growth of 10% year-on-year basis. The growth in the API business is mainly driven by higher volumes on account of the improved asset utilization and debottlenecking. For the quarter, the revenue from US formulation without Puerto Rico increased by 22% year-on-year to rupees 3,588 crores. On a constant currency basis, the US revenue increased by 20% year-on-year basis to US $432 million. The growth was mainly driven by volume gains, stable demand, and new product launches. Our large product portfolio basket helped us to optimally maintain the product stability, price stability. The Q-on-Q decline of around 4%, however, was mainly on account of the lower sale from UGA and seasonality. The OSD sales volume in US are expected to pick up during the quarter. Revenue from US formulation for the year increased by 23% to rupees 13,867 crores to our US dollar 1,675 million. During the quarter, we have filed 11 ANDAs, received approval of 17 ANDAs, and launched 7 products. Revenue from oral generic product in USA has increased by 23% year-on-year to 279 in Q4 FY'24. Also, for the full year, the revenue from oral generic products in USA increased by 18% to 1,078 million. Revenue from injectables and specialty business in USA increased by 28% year-on-year to US dollar 104 million. The year-on-year growth was driven by new product launches and volume gains. Albeit the quarter-on-quarter decline was mainly on account of the UGA 3 plant temporary shutdown. The total injectable and specialty sales globally increased by 26% year-on-year and stood at US dollar 143 million for Q4. For the full year revenue, the revenue from injectables and specialty business in USA increased by 38% year-on-year to 397 million. The total global injectables and specialty sales for the year increased by 31% year-on-year and stood at 541 million for the year against last year's US dollar 414 million. We have a total of 223 injectables and specialties ANDA filings as on 31st March 24. Out of that, we received 169 received final approval and remaining 54 under review or have tentative approval. The company as on 31st March has 830 ANDAs, out of which 658 as final approval and 27 as tentative approval. For the quarter, European formulation clocked a revenue of 1,832 crores, an increase of 10% year-on-year. In constant currency terms, the Europe revenue was euro 203 million against euro 188 million of last year Q4. For the full year, the European formulation revenues grew by 12% and clocked a revenue of euro 798 million. For the quarter, growth markets revenue increased by 50% year-on-year to 852 crores. In US dollar terms, revenue grew at 103 million in Q4 FY'24. The revenue increase was mainly driven by sales across the markets. For the growth markets, revenue increased by 29%. In US dollar terms, revenue grew to 281 million from FY'24 from 243 million in the previous year. For the quarter, ARV formulation revenue increased by 31% to 238 crores or US dollar 29 million. For the year, ARV business is decreased by 11% to 868 crores or US dollar 105, mainly due to pricing pressures or partially offset by volume gain. During the quarter, the raw material cost eased up further, supporting our gross contribution, which stood at 4,519 crores. Gross margin for the quarter was 59.6% against 57.1% of the previous year, which was supported favorably by the favorable business and product mix and other items. Moreover, the gross contribution stood at 16,399 crores with a gross margin of 56.5% against 54.6% of last year. R&D expenditure stood at 392 crores for the quarter, which is 5.2% of the revenue. For the year, the R&D expenditure stood at 1,480 crores, which is 5.1% of revenue. Improved capacity utilization seen during the last few quarters has resulted in continued operating leverage benefit during the Q4 as well as. Consequently, EBITDA improved to 1,687 crores. For the full year, the operating leverage benefit has reflected in 20.1% against 15.1%. Net capex for the quarter is 70 million, which mainly includes approximately 33 million towards the Pen-G project. Net capex for the year is 422 million, which includes approximately 146 million towards Pen-G project. Cumulative capex for the Pen-G project amounts to 285 million. The average USD INR exchange rate is 83.04 against 83.24 in Q3 FY'24. The business had a net cash flow of 12 million during this quarter before the Penji investments and investments in new market. As a result, the net cash position, including the investments at the end of March 24, was $18 million. The gross debt is 758 million. Recent changes in the composition board. Our board structure comprises of 10 board members, out of which 5 are independent directors, including 2 women directors. Mr. M.R. Kumar, ex-chairman of LIC India, has been appointed as the chairman of board of directors of the company from April 1, 2024. Dr. Deepali Pant Joshi, retired as Executive Director of RBI, joined the Board of Directors during the year. Outlook. Our financial performance in Q4 FY'24 and the full year FY'24 was driven higher sales on the back of new product launches, expansion into new growth markets, volume gains, and stable pricing. During the quarter, we commercialized 4 manufacturing facilities, including Penji, 6-APA, and injectable. During the next few quarters, we expect the operation of these plants to ramp up and start contributing to the top and bottom line meaningfully. With our continued investment in R&D, we continue to develop the strong growth pipeline. We are focusing on our key strategic priorities to enable a long-term growth. Our growth levers include backward integration to build resilient supply chain for key raw material, reflected in the recent commercialization of Penji and 6-APA facility, expanding manufacturing footprint with capacity enhancement, debottlenecking the existing capacities, and new facility creation. At present, we are manufacturing around 47 billion units of formulation. Expanding growth market present with a recent foray into the Indonesian market with acquisition of 17 brands. Long-term growth with the biosimilars. Our biosimilars and complex products progressing. The clinical trials are advancing. Mr. Satkani, CEO, will elaborate on that. Ensuring a well-diversified product portfolio reflected in 830 US ANDA file and continued focus on R&D investment. With the continued ramp-up of our recently added capacity, R&D efforts, and focus on our strategic growth lever, we are confident of continuing our growth trajectory during the FY'25 as well. We expect to achieve around a 21 to 22% of EBITDA margin target set internally for the year. This is all from my mind. Now our business leaders will give more clarity on any specific aspects in our Q&A session. We are happy to take your questions. Thank you.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask questions may raise your hand from the participant tab on your screen. Participants are requested to use headphones or earphones while asking the question. The first question is from Kunal Dhamesha.
Hi, good morning. Can you hear me?
Yes.
Yeah. Thank you for the opportunity and congratulations on a good set of numbers. Just the first question on the growth outlook for the FY'25. While we have said that we'll continue to grow, would you be able to give any range, for the outlook for FY'25?
We are not giving any growth outlook overall as a company, but our respective business leaders will talk about it when they are addressing their businesses.
Okay, sure. So then, given that now UGR3 is classified as an OAI and there are 29 pending ANDAs, what is our plan to de-risk our growth for the next couple of years till we are able to resolve this official action indicated?
Hi, Kunal. Morning. Yeah, I'm sure you are aware that we have built the Vizag plant as a backup or de-risking plant for UGR3. Now, Vizag plant audit is completed, and hopefully we should get our first approval sometime very soon. So we will start actually filing more products from our Vizag plant. We also have a plan to de-risk UGR3 by doing dual filings from Vizag. So that's been the plan for almost 2 years now. And now it is getting actualized with the audit getting over.
Sir, how many filings because of this OAI for, let's say, next 2 years will get stuck from UGR3 out of this 29?
It's around 20 plus will get stuck. But what we are working, Kunal, is in terms of, because we have taken all proactive actions and we have never waited for FDA to come back. And we hope that we will be in a position to show to FDA that we are in state of compliance. And I expect at least 1 year getting impacted, but hopefully the second year we should come back. That's our internal estimates on this.
Sure, sir. Thank you on that. And second question on the for Satkarni sir on the biologic CMO LOI that we have signed with MST. Any update on that LOI to contract signing as of now, and in terms of whatever capex that we are putting capacities, etc. Are we through in terms of basic infra? What is the update there?
Hello, Kunal. With respect to the letter of intent, limited letter of intent that we signed with Merck, I have updated the exchanges that I would attempt to close the definitive agreement by 31st of May. Now, I think we are truly on track to closing the definitive agreement with MSD, Singapore entity, by 31st of May. So I don't see any showstoppers there. Sure, there are a few nitty-gritties that we are still ironing out, but I'm optimistic about closing it by 31st May. If there are any delays by a couple of weeks, then we'll keep the exchanges informed about it. But at this point, I don't see any showstoppers. What is your next second question? What was your second question, Kunal?
Yeah, so in terms of capacities, how many liters worth of bioreactors we are putting, and what's the capex that we are planning for that contract, and what's the outlook on that in terms of where it is in terms of finalizing?
Correct. So we have already started our project work. As I have told before, this is a large mammalian cell culture manufacturing facility, which is being done in two phases. The phase one capacities would be 2 into 15 KL mammalian cell culture stainless steel bioreactors with associated purification lines to manufacture the drug substance, as well as isolator-based vial filling line to convert the drug substance into the finished product. So this is an integrated CMO offering end-to-end services in manufacturing, both drug substance, drug product, and the QC release. The project is shaping well. If you remember the details about my limited letter of intent, we have capped ourselves to an exposure of around $24.5 million to the point where we sign the definitive agreement. In case for any reason, we don't sign the definitive agreement, we are covered for the 24.5 million. So right now we are well within that cap, and I think the deal is going through. So exciting times for us, and this is the update that I have on the project. It's going well. It's on time. It's already been 5 months that we started the civil work, and by 2026, the capacities will be aligned to and commissioned to start the water and engineering runs in the facility at Taranaki.
Perfect. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from Damayanti Kerai.
Hi, good morning. I hope I'm audible.
Yes.
Okay, thank you. So my first question is again on UGR 3. So as Dr. Yugandhar mentioned, the de-risking process is on, and dual filing is one of the process which you are taking. So just want to understand, out of the 29 ANDAs which are pending from the UGR 3 plant, have you filed any products from Vizag so far, or this process will start now?
It will start now, Damayanti, because we, frankly, let me put it that other way around. I think all the new filings and some of the site transfer projects is what we are planning to do it in Vizag. But none of the existing filings, we have no plans of transferring the existing filings of UGR3 to Vizag. Okay. I hope that clarifies your question. So we are still confident that we will be in a position to resolve issues and we will secure approvals from UGR3. That's our internal confidence level at this point.
Okay. And in terms of remediation, what kind of timeline you are anticipating? Say, like you already started when the FDA update came first, and you took obviously some precautionary measures, etc. So now, in terms of regulation, what are the plans? Say, like you'll be hiring third-party consultant, and what will be approximate timeline anticipated by your team within which you can resolve the FDA's queries satisfactorily?
Okay, Damayanti, like as you are aware, we have taken the remediations even in the middle of the audit itself. In fact, when we voluntarily stopped the manufacturing, that was the first step what we have taken when we observed there are some deficiencies. So our remediation activities started immediately after the audit. So we are already into the 4th month of remediation. Okay, and we expect probably like it will go on for another 3-4 months. Post that, as and when the management feels confident that we have addressed all the concerns raised by the auditors, we will approach the FDA again.
Got it, clear. And very broadly, in terms of impact, in terms of sales, the 4th quarter number is broadly representative of what we may say for next few quarters while remediation is on, or like it could come down, say,
No, in
slightly.
fact, 4th quarter, I have taken the hit. I think I told this last time to one of their list that because we stopped the manufacturing, we stopped the distribution out of abundant caution, and we got everything retested, and we with full confidence we started releasing the products. So we have taken whatever sales hit what we wanted to take in Q4 of last year. Okay, now Q1 onwards, it should be normal. So we expect a run rate of around $150 million every year across the globe. That's the UGR run rate now. And we feel like we will maintain that.
Okay, that's clear. Thank you. And my second question is for Dr. Satkarni. If you can update us on some of the key biologics project in terms of approval timeline, etc., and when we should be seeing first product coming in market.
Hello, Damayanti. So I would like to update the progress we are making in the biosimilars business with the recent trastuzumab marketing authorization we received in India. This is our first product authorization. We have promptly applied for a manufacturing license, which we expect to obtain very soon. So the plan is to manufacture the batches and launch the product in the second half of this year into the domestic market. As you know, this product, which is used in treating early and metastatic breast cancers that are HER2 positive, is also filed with the European Medicines Agency, and the review procedure has already started. We are getting slightly delayed with the US FDA filing for this product, as we could only complete a type 4, a mandatory type 4 pre-submission meeting with the FDA in May. So the type 4 pre-submission meeting went really well. I believe we should be able to complete the US FDA filing also in the next three months. So I don't see any further showstoppers. If the procedure unfolds well with the European Medicines Agency without any glitches or without any additional data requirements, then I see a decision coming out somewhere towards the end of Q3 or early Q4 for this product. So this is about the first product. Then we have 2 more biosimilars, both in the oncology space, which were also filed with the European Medicines Agency. Again, the guidance on these two biosimilars will also be somewhere towards the end Q3 or early Q4 if the regulatory procedure unfolds without any procedural clock stops that require any remediations, etc., where I extend my clock stops and stuff, then we are expecting a Q3, Q4 approval for these products or otherwise. So that's about the three biosimilars which are filed. Now, with the other biosimilars, as you know, I have told in the last earnings call that we have advanced two immunology biosimilars and also gave a press release last quarter, I think in February, I'm not sure, but February, I guess, that we are working on a biosimilar to Xolair, which successfully met its PK/PD endpoints in a 3-arm phase 1 study conducted in 165 healthy volunteers. The results are extremely encouraging. We met both the key parameters of PK and PD within the equivalence ranges that we expect. I think this product is now in phase 3 across multiple European countries and is progressing well to conclude the recruitment phase by September, October. So I expect to file this product both with the EMEA as well as the FDA sometime in Q2, Q3 of the next fiscal. Likewise, our denosumab biosimilar, which also I talked about in the last earnings call, I'm happy to state that we have completed the phase 3 recruitment across 40 sites in Europe for this product. So this is about 436 osteoporosis patients that we completed the recruitment for. The primary objective of this study is to compare efficacy of our biosimilar versus the originator's Prolia. And I hope that I would be able to submit this product also with the EMEA and FDA between Q2 and Q3 of the next fiscal year. Along with these two, there are two more products, an ophthalmic product and an oncology product in phase 3 for a long time now. The oncology product is inching towards the closure of recruitment. I hope to complete the recruitment by October this year, and the filing phase would be Q4 the next fiscal. The ophthalmic product will be delayed. The ophthalmic product, the recruitment rate is slow across Europe, so I would be able to probably hoping to file this product only in 26-27. So that's about the biosimilars products and what's happening with my 7 products in wave 1 and wave 2.
Dr. Satkarni, that's very helpful. Thank you for your response. I'll get back in queue.
Great, thanks.
Thank you. The next question is from Neha Manpuria.
Yeah, thanks for taking my question. My first question, Yugandhar sir, on Eugia or broader injectable, is it fair to assume that this will be a year of very little growth outside of, generic Revlimid for the injectable business? Because, even with Vizag, etc., your first approvals probably start coming through only in the second half of the year. Or, in your view, how should we look at growth of the business? Because the 150 million, per quarter that you mentioned is very similar to the number that you're doing, you've done the fourth quarter.
You're right, Neha. In fact, it will be a year of muted growth. So we do expect a double-digit growth, but definitely not the way like we have grown from FY'23 to FY'24. And that was always the plan. Like this year, FY'25 was supposed to be a year of a muted growth because there are no blockbuster products approvals expected in FY'25 as per the original plan itself. So we expect things to be much better starting FY'26 when oncology OSDs and other significant filings where the settlements have been done will come. So FY'25 is going to be a muted growth.
Understood. And, in terms of remediation, because we've been doing this for 4 months, in your view, what additionally does the FDA expect, Aurubindo Eugia to do on that facility, for which you think it will take another 3-4 months? If you could give us some color on that.
No, in fact, the FDA never said anything. Okay. In fact, we have done whatever we have done it voluntarily based on the observations, and we expect to continue the same things which obviously there are some things which we would have completed in 2 months, some things which takes 4 months, some things which take 6 months. This is all absolutely voluntary. FDA never advised us what to be done because when we received the letter OI,
Yeah.
they didn't say anything. Okay, so
Yeah.
like it is basically, I'm assuming that whatever we have committed as part of our response, they're fine with it. I have to complete it. That's all.
Understood. And my second question is on the European business. We've been able to grow the European business base. Constant currency growth this time was around 80%. With the commissioning of Vizag and also the China facility, how should we look at the growth trajectory for Europe in the next year?
You're asking me, or like, should I ask
No,
my
no.
colleague?
Sorry, I was asking this. Any of the other management team to
Yeah,
answer.
Murali, like, would you like to?
Yeah, good morning, and yeah, happy to answer this. Yes, in Europe at this moment, we are definitely growing little ahead of the market growth rate, and the Vizag unit's contribution is going to be substantial. And of course, China unit is yet to come and supplies. We expect that to happen in FY'25.
Understood. And one last question, if I can squeeze in one more. Subbu sir, in FY'25, given that global specialty isn't growing as much, is it fair to assume that margin expansion might be limited or limited to additional generic Revlimid? How should we look at, margins for FY'25? Sorry.
So, Megha, as I said in my earlier one, we are targeting to achieve a EBITDA margin of 21 to 22%. We are working on the ramping up of the Pen-G will be complete by September. We will be able to give a better number in the month of November earnings call. Once we know what are all the issues and what is the sort of margins we are getting in the Pen-G process, in the Pen-G business, etc., we'll be able to tell. But we are very positive about the growth margin for this year as well as the EBITDA margin.
Got it. Thank you so much, sir.
Thank you. The next question is from Surya Patra.
Yeah, thanks for the opportunity and congrats for the great set of numbers, sir. So my first question is on the, let's say, Pen-G. What are the kind of operation or utilization level that we have it's reached, or what are the kind of utilization that we are targeting in the for the current year? And have you really commercialized the things and have you seen any kind of price impact in the market for Pen-G?
Surya, in terms of the last one, price of Pen-G is soaring around $25 per kg. Having said that, our consumption or Indian consumption of Pen-G is not very big actually. It is only 50% only. What is more important is the conversion of the Pen-G into 6-APA, which has successfully done it.
Yeah.
And because that consumption is more, and that price remaining stable in the last 2 years, and it is in commensurate with the Pen-G prices now.
Okay.
Right. So it is there. In terms of the entire Pen-G business, we have taken a test batch in the month of March and come out well. And we have done one big batch, and it is also going well. And hopefully from June first week onwards, starting in the next 2 days, we'll be doing a little bit expanding the number of batches, etc. So the entire lot of batches at the same time running all the fermenters will take place in the month of September, because the fermentation is not an easy process. It's a very complicated process. And there are multiple issues we are coming across, and we have been resolving one by one, and we are able to succeed in the first major batch. And hopefully in another 2-3 days, we will come to know the outcome of that. Okay.
Sure. But is there any sense about the yield that you have so far got, sir?
No. See, the first thing is from test batch, we have to take a bigger batch one. And after the bigger batch, expand the same bigger batch into multiple batches. I mean, we are having 10 sets of batches, starting batches. So we will expand from 1 to nearly 5 like that, or 3 or 4, 5 like that. And after that, we will expand to 10. So yield is not the main issue right now. Yield we will be addressing only in the month of September.
Sure. Okay. My second question is about your possibly Yugandhar sir, you can respond. Our preparedness about launch of Rynuta in the US. You have already indicated that that launch is likely to happen in the second half of the current financial year. So, how important this launch could be for us, and how important it could be as a trigger, because knowing the fact that this is a kind of a $1.8 billion size, what is your preparedness for this launch, and how important that you do think about it?
Which product are you using to
No, Yugandhar, I think I'll take this question.
Yeah, okay.
I think he's referring to the product that we're getting from eVibe.
Yeah.
Right. So we have briefly talked about it the last call.
Yeah.
So we said we expect to launch it in the second half of the current calendar year. That is sometime in July. And we also mentioned that there are a number of competitors in the market. And we had also indicated that we don't believe that the volume or the pricing is going to be so high. But we'll have to see as we launch this product. We are somewhat guarded we are somewhat not so optimistic, in terms of what you're saying with regard to the value. But we think it's a good product. Once we launch, we'll have a better feel of it.
Okay. So just if I some more clarification about it. See, if the size of the product is, let's say, $1.7, $1.8 billion, and the competition is generally from the biosimilars, and we know that the penetration of the biosimilar is kind of not so great, and generally the interest of the payer in US biosimilar business, if you see, is not generally aligned with biosimilar manufacturer. Rather, it is more aligned with the innovators. And since it is an innovative molecule, is it not fair to believe more positively than what you have indicated?
So I leave that to you on how you want to look at it. But we have done a study, and typically we like to do it conservatively. And
sure.
I think we have a fairly conservative estimate. This is a non-biologic product, as you're aware, and this is something different. So we have to see as we go.
Okay. This is not a biologic molecule, sir?
I don't believe so.
Okay. Okay. So my third question is about the biosimilar opportunity as a whole, sir. So far, what are the kind of money that we have spent towards this biosimilar portfolio creation and all that, sir? And whether this cost is currently capitalized and or it is expensed currently. And once you start commercializing the product, what is the likelihood that it will have some impact on the overall margins of the company? So if you can give some sense about it.
I will provide some data, but the impact will be informed by Satkarni.
Yeah.
We have spent around 340 million so far, and only we have capitalized around 75 million.
Okay.
Balance has been charged to P&L, right? Overall impact on that, Satkarni will be able to answer.
Okay.
So Surya, the spend numbers have been provided by Subbu.
Yeah.
Now, in terms of impact, as you can see, we have completed the licensed clinical trials for 3 biosimilars. We should also realize that we have been in existence only from 2018-19, seriously.
Yeah.
So we completed three clinical trials and filed them for 3 products. Filed 3 products. Now we have 4 more in global phase 3 clinical trials. Now, if you see how much does the competition spend versus what we spend, on developing a product all the way from the cell line to bringing it to clinical efficacy trials. It's very prudent. It's very objective. We we are very guarded in what we spend because we push the regulatory barriers when we design our clinical trials. Now, in terms of the impact, while I hate to put certain numbers against these products, there is a good opportunity with both wave 1 and wave 2 of the products if they get launched in Europe and if US also comes by. Especially, I am very optimistic about a product like omalizumab, where we will be probably one of the 4 companies to vie for the US and the European market. And it's a $4 billion product with probably 4 players in it by 26, 27. So I expect a good revenue stream once the product gets into the European and the US market. So all these 7 products, while I hate to put any numbers against it, our business is sustainable. The cost of goods ensures that we have a margin base of around at least 60 to 80%, depending on which market we are. And to your question about how much will this increase the margin points of Aurubindo overall, there will be an impact depending on what share of the business that we get in. But biosimilars with a higher margin will definitely increase to a certain extent the margin base of Aurubindo as a whole. But I expect it to make substantial contributions from the year 29-30, the biosimilars business, to the overall Aurubindo margin base.
Okay. Just last, in fact, are you really worried about the fact that the progress of biosimilars for adalimumab, what we have seen in the US, looking at that scenario, are you worried about your pipeline or your entry into the US business with your pipeline?
To be honest, no, because the biosimilars landscape, especially the market opportunity and the market landscape, is fast evolving. Adalimumab is a specific case that people would like to discuss, but I would like to look at the better growth stories that we have. For example, you look at the pegfilgrastim space, where a biosimilar player has taken at least $700 to $800 million of the revenues from the US market alone. So adalimumab is a curious case because it is a chronic segment product, which means that you need repeated doses of the product. And in chronic segment, I expect the markets to behave in a slightly disruptive manner, especially if someone comes in with a disruptive pricing strategy. But whether that will happen across all the products and primarily across products in oncology, I personally don't think so. Come what may, our business model has been built in a manner that we will be resilient with respect to any price disruptions that happen. For example, we are building our price model versus the Europe right now, where you are already seeing in the chronic segment a bleeding of around 85 and 80% from the innovator pricing. Even if there is such a price erosion, our products will be able to still sustain the margin of around 50 to 75% very easily, even if there is further price erosion. Only then we are entering, we are developing the product and entering into the market. We hope to enter into the market. So as much as you are very cautious about what's happening in the US, I am also watching that space closely. But I think biosimilars are required in the US, especially to reduce the healthcare burden. And the normalization will happen very soon. Adalimumab is a one-off case, and it might happen in the chronic segment where products like adalimumab are prescribed. But in oncology segment, I still think there will be very healthy margins in the US, not so much in the Europe.
Sure, sir. Yeah, thank you. Wish you all the best.
Thank you.
Surya, just to clarify, my apologies. It's a biologic. I'm sorry. I meant it's not a biosimilar, right? So this is something different. It's a biologic. So we are competing against a number of players who are there in the biosimilars.
I would just add a point there to what Swami said, Surya. It is a biologic, but it's a biologic going against the filgrastims and the pegylated filgrastims. So that's the reason why Swami is conservative with his numbers. Once he gets a feel of the market, when he launches it, then he will tell you how the product is shaping up. I mean, it is as good as a guess that you have, that we have also in the US market with this product.
Thank you. As we have a long queue of questions, I would request everyone to refrain to 2 questions per participants. The next question is from Shyam Srinivasan.
Yeah, good morning. Thank you for taking my question. Just a quick housekeeping. The specialty and injectable revenue in the US, 104 million. Yugandhar sir, this had a 20 million hit, right? I'm just trying to get the number right in terms of what we stopped for Q4.
That's right.
Okay, and when you're now guiding for it to go back to 150, I'm assuming whatever 110 was the last quarter number.
No, it's actually like it's a global number versus Shyam. It is a local US number. So the global number, what we expect is a global revenue of 150 million.
Understood.
US will continue to be in the range of 100 to 110. That's the range out of the 150.
Understood. And do you expect a ramp up in Revlimid for next year? Fiscal 25, I meant. Fiscal 25, sorry.
Yeah, depending on the settlement percentages, normally like we do expect a slight improvement every year.
Sure. Okay, that's helpful. Second question is on the gross margins. Subbu sir, I think has reached almost, if I round up, 60%. So it's a number we've not seen for some time. So just want to get the sense of what is sustainable, which are the cyclical elements in it, which will probably go away, maybe like whatever low raw material cost you called out earlier. What can sustain from a mix perspective? And when we do the 21 to 22 guidance from EBITDA margins, what are the things that could be below the gross margin lines that could be growing faster?
Yeah, last year we did 20.1.
Subbu sir, you're not audible. You're very feeble.
Last year we did around 20.1%. So again, that when you are saying 21 to 22, one is the overall gross margin has improved considerably by about 2 to 3%, right? Mm-hmm. But in last quarter, this quarter, if you recollect, last quarter we had a big hit on account of the clawback tax, which we have explained to you, around 13 million we are taking a hit. Again, that is around 122 crores, if I recollect, which has been given in the press release. Again, that we are around 35 to 40 crores only this quarter. So this is expected to continue. Why? Because the government has, France government has come with a clawback notification, which helps us to have a lower clawback tax this year. That is one thing. In terms of the raw material price, the prices have come down considerably in the last 4 quarters, and it is now remaining slightly lower to flat, right? I don't see a major improvement, decrease in the raw material prices. But what is more important is, as we said, the US business is doing well and they are continuing to ramp up, and which is help us to drive the operating efficiency, which can help us to improve the overall EBITDA margin. And also, as Swami has explained or touched upon it, there are a lot of new product launches which he has done, which is also helping us, and the pricing environment is stable. So we don't see a major down in the EBITDA margin as well as the gross margin. Once the Pen-G comes, which I explained in the month of September, what is the additional gross margin improvement which will come out of the Pen-G will be disclosed sometime in November earnings call.
Understood, sir. My last question again, you talked about Pen-G prices at $25. Last calendar year, this was 30. So are you seeing, action from some of the big 3, big 4 in Pen-G already in anticipation of your, 15,000 metric ton total? I'm saying maybe global will be lower, but just are you seeing some signs that they are starting to drop prices? At what dollar per kilogram or ton do you think it starts becoming less feasible? Like if it goes below $20, let's assume, does this become difficult? So I'll stop there. Thank you.
My chief buyer does not believe there will be a big drop in the Pen-G prices. Having said that, the Pen-G price has no relevance in terms of the overall consumption of the entire penicillin G, because we are going to consume it convert it and then consume it as 6-APA or some other product, other forward derivatives. So really the PENG price has no meaning actually, because we are not importing any PENG at all. We are importing kgs, single digit kgs only. So PENG price has no relevance for us. What is important is how much we are going to convert it into 6-APA, how much we are able to further convert it into amoxicillin bulk and then sell it in the market or sell it as 6-APA is what really matters. And that price, 6-APA price is always stable. So let's forget what is the PENG price. PENG price has no meaning actually, relevance actually.
Got it, sir. Helpful. Thank you and all the best.
Thank you. The next question is from Tarang Agarwal.
Hi, good morning, and congrats on an extremely strong FY'24. Couple of questions, one on CapEx. Quite a few projects have been commercialized, PENG, 6-APA, Vizag, granulation, China. If you could give us a sense on when you've suggested PENG will probably start in September, both PENG and 6-APA. But if you could give us a sense on the other three projects, when will they start meaningfully contribute? And further, CWIP as on March 31st, 2024 was about 20,750 crores, and intangibles under development was about 1130 crores. So if you could just give us some sense on, what are they referring to, what plants or what specific products are they referring to? My sense is $75 million of biosimilar capitalization, a large part of it would be under intangibles under development, but I'll leave for you to comment on that. And then I have a couple of questions after. Thank you.
We have 4 projects commissioned in the last quarter. That is, one is the PENG and the second is the 6-APA. We will able to, that meaningful contribution will start coming from Q3 onwards, right? And we also capitalize part of Vizag facility, injectable facility, and Aurubindo project, right? Which we have done only partial capitalization, the front end only we have done it. So those things are also Vizag, as Yugandhar already informed, the inspection took place. He is waiting for the next steps. He has elaborated in detail. In terms of the Aurubindo, it will also start moving in the by August, September, it will start moving up. In terms of the total overall 2,739 crores or $325 million, as you rightly said, Curotech forms around 78 million, and USA, Dayton facility in USA will be around 70 million, and we have other projects which are very, small projects. These two are in terms of the intangible asset and development, which you said around 1129 crores are 1129 crores or $135 million. Once again, there are certain Acrotech products which are under WIP. I think just increasing the volume. Yeah. Or Acrotech, which is around $75 million, which they are doing a clinical trial, and UGS specialties, which Yugandhar has already explained that is after the settlement, etc. It will go by 26. So like that, these are then other things are very small. So we are actually our plate is very clear, and we will be capitalizing, and we will be started seeing a meaningful contribution starting September, October onwards.
Perfect. Okay, thank you. On US and Europe, US, can we expect the current OST run rate of about $280 million to edge up to about $300 million as we move forward? And similarly for Europe, 200 million euros seems to be the new base. How should we look at it for FY'25?
Subbu, you want me to take up the US? Yeah.
Then I'll. Thank you.
Yeah. So on the US, we are fairly optimistic about the outlook for the coming fiscal, with new launches being the main drivers. I think I cannot quantify any particular amount, but we have a large base, and compounding growth on this base will be difficult. But we do believe that there is a reason to be optimistic about the growth.
on Europe?
Murli?
Yeah, on Europe, yeah, Tarang, as you rightly said, 200 million plus is the new base. At least we have started hitting this in the last 2 quarters. Even though in Q3 it was short of 200, but you account for the clawback, we were crossing 200, and this quarter also we could do it. So the expectation in FY'25, all the quarters will be doing north of 200, and the idea is to grow further.
Perfect. Last question, sir. Auropeptides as a business was incorporated somewhere in 2013-14. And while we see an exhaustive list of peptide DMFs on your website, we're not sure what's happening in this business in terms of what is the traction that Auro has both on the API and the formulation space. So if you could just give us a sense on where this business is, and it's been vintage has been quite long, about 10 years now.
Tarang, hi, I would take the question. I would start with an update on Auropeptides. Auropeptides, the manufacturing facility was inspected by the US FDA from 12th Feb to 16th Feb, and FDA has determined that the inspection is closed with 0 observations. We are particularly glad for this outcome, as you have rightly mentioned in your question, that we have been steadfast in developing synthetic peptides. These are very difficult peptides for over 10 to 12 years now. We have 14 DMFs filed, cutting across oncology segments and others. And some of these have contributed to 5 ANDA approvals for our customers, including Aurubindo and Eugia. Right now, our work is in primarily oncology and diabetes. Our work in GLP-1s, compared to our industry peers, is very less talked about. We have an active DMF for one of the GLP-1 products, and our second GLP-1 product is now fully developed with the process validated as well. We hope to file a DMF in the next 2 or 3 months for this product. Right now, we are expanding our synthesis and purification capabilities for GLP-1s, as we are aligning some additional capacities that will become available by early next year. So in all, our focus on diabetes and oncology segments will hopefully build momentum in this business. I am quietly confident and pleased at how we are starting to relook at our peptides business, mixed with a bit of caution when it comes to GLP-1s. At the same time, with both optimism and prudence in how we reinvigorated our pipeline. One more update is that recently through APL, through Aurubindo, we have received an approval for linaclotide. Linaclotide is a peptide, a synthetic 14 amino acid cyclic peptide. It is used in the treatment of constipation and irritable bowel syndrome. So we are going to launch that product through a very trusted partner. This is a first-in-class peptide to be available for Indian population. Probably becomes the first launch in the next 3 or 4 months space. So you can see that we are shaping up the business. We are trying to do a few things there, and going forward, you will get constant updates on what we are doing in our peptides.
Got it. Just last, in terms of accounting, the peptides revenues would be bunched up in the API business, or would be bunched up elsewhere?
Subbu, do you want to take that?
Yeah. See, as on it, if the ANDA is in the name of Aurubindo, it will go into that. But we'll look into the possibility of putting it as part of the peptide. We'll do some work on that. Ideally, we like to go into peptide, but let's look into the issues beyond that.
Okay. Thank you.
Thank you. The next question is from Harith Ahmed.
Hi, good morning. Thanks for the opportunity. On biosimilars, you touched on your filing plans for trastuzumab in the US. Can you share that again? I missed that. And for pegfilgrastim, how should we think about our US plans? Because as you mentioned, the market opportunity is quite significant, and it's been a while since we filed in Europe, but we haven't talked about any US filings till now.
I think the part 2 of the question is very interesting, but I would address the trastuzumab one, which is easier. Trastuzumab, with the US FDA, we have completed a type 2 followed by a type 4 meeting. A type 4 meeting is considered to be the pre-submission meeting, where any differences or any additional data requirements from the FDA will be pronounced. We had a successful type 4 pre-submission meeting. Now, what does this mean? A successful type 4 pre-submission meeting means that we can go ahead and file the product. So I'm expecting to file the product and make some changes to the dossier as required by the FDA in the next 2 months and file the product. Probably by next quarter end, we should be filing this product with the FDA. And the procedure unfolds. The procedure would be anywhere between 9 to 12 months time. Now, with respect to pegfilgrastim, Harit, as you know, that we haven't done an extensive phase 1, phase 3 clinical trial for filgrastim or pegylated filgrastim. We have gone with an abbreviated clinical pathway where we have only conducted a phase 1 PK/PD study in healthy volunteers, that to a very small number, and push the regulatory barrier, especially in Europe and with MHRA, to file this product with them. Now, FDA, in terms of their totality of evidence approach that is required for the biosimilars, they will ask for a phase 1 and phase 3. With filgrastim and pegfilgrastim, it is slightly different. We haven't ever developed this product for the US market. The thought is very recent that while we had a meeting with FDA and FDA is convinced with our approach of doing a phase 1, they wanted a small additional immunogenicity trial, while they were okay with us not doing a phase 3 efficacy trial. So in the sense that the data that we have generated for the European trial is good enough, plus some additional data on immunogenicity has to be generated in healthy volunteers, and then the pegfilgrastim will also be readied for the US FDA filing. Now, the timing of it, originally I was thinking that I will file it somewhere before Q3 this year, but that might get slightly pushed into Q4 or into Q1 next year. But pegfilgrastim, we are definitely going to take it to the US market. We will take it not just the PFS to the US market. We would like to take the auto-injector also to the to the US market. We are working with the agency very closely. We have completed a type 2 meeting on pegylated filgrastim. I'm hoping to have a type 4 meeting, a pre-submission meeting also with the FDA sometime in the next quarter. Does that answer your question, Harit?
He's on mute. He's on mute, I think.
I think.
Yeah. Sorry about that. So next one is on the significant capacities that we have.
Because there are already 9:30. There are multiple people are there. I just want them already. It's beyond 9:30. Huh?
Yeah. So last one.
We'll have offline queries, etc. Okay, other people, let them get a chance.
All right. I'll get back in the queue. Thanks.
Thank you, Harit. Next question is from Nitin Agarwal.
Hi, sir. Thanks for taking my question. So, 2 quick ones. So, what capex should we assume for F25?
We are not planning to put any big capex because all the major capex have been done and then capitalized. So, probably we must be having around sustenance capital and what will be the debottlenecking, etc. Must be around 200 million is what we are thinking.
Okay,
plus any market authorization, if it comes very lucrative, etc., we will do that. Okay, fine.
Sir, on this inorganic, we've been acquiring about $100 million or thereabouts of assets as and when the market opportunities have been attractive.
Yeah.
I mean, is there a number that we have in mind to spend on buying out?
No, it is not like that. If any opportunity comes only, we will look into that. We are not scouting for any market authorizations on our own. If it comes, we will look into it.
Okay. And so last one, other growth markets did extremely well this quarter. This number which we've done in this quarter, $100 million plus, how should we think about it on as a base for, should we look at it as a base now for the next year onwards?
I think we have done well this quarter. Probably we must be doing something like 75, I mean around 300 million is what we should be aiming for next.
Okay, sir. Thank you.
Thank you. The next question is from Sangeeta.
Hi, this is Andre, Sangeeta's partner. I had two questions on biosimilars. One was that, can you explain to me generally what are the trends in the US and Europe towards biosimilars, particularly when the competition is not a biosimilar? What are the advantages, etc., of a biosimilar that may be trending the market in favor of biosimilars? That was the first question. And the second question was that, could you give some more color as to when will the biosimilar opportunity be effectively monetized? What should our assumption be? Are we talking about F26 or F27 or calendar 27, 26? Could you give us some kind of idea on the timelines of when we can expect the biosimilar opportunity to be monetized?
To answer your question one, to be very honest, I did not understand the question one in entirety, but I would try and answer that. A biosimilar is against an innovator product, an existing biological entity.
Yeah.
So I did not understand that because you have a biological entity which is already there and it goes off patent when you launch a biosimilar into the market. So does it answer your question, or do you want it to phrase it differently?
No, my question was, what are the trends in the US that are favoring biosimilars, if any, in the Europe?
Essentially, look, the biosimilars or the biologics pose a huge healthcare burden with the pricing and all. So not just the US, but all the developed countries across the world would like to have cost-effective alternatives to the biologics. And that's the reason why biosimilars find traction in these markets. Now, with the case of products like adalimumab, where the innovator also becomes very disruptive over a period of time because he had made his margins. And when the biosimilars come in, then there will be additional price rebates, etc. And to switch from a biologic to a biosimilar requires an interchangeability studies with the FDA, etc. That slows down the uptake of biosimilars. But right now, the trends have been encouraging. There are a lot of good companies which are doing well in the US with respect to biosimilars. So I expect with the next wave of patent cliff, more biosimilars will be in the market, especially across oncology and immunology segments. And the market continues to be favorable in terms of, the US market continues to be favorable in terms of the uptake of biosimilars. I see the regulatory guidelines also easing out a bit over the next 6 to 7 years that prompts more biosimilar players to come into the market. That's part one of the question. What is part two of your question?
Part two was as to when do you expect to start monetizing the biosimilar opportunity? Rough timelines.
The real opportunity for us in terms of the commercial space starts from the 1 quarter of this year, possibly, and from the next year. I would say you should wait for at least 2 to 4 years time frame. Around 27, 28 would be the opportunity to monetize this. Subbu, do you want to add to that?
Yeah, I think one is, as Satkani said, Q3, Q4 you will do to the Indian market, and after that, probably that's a very small portion Indian market, but its major things are going to come from Europe and US, which is around 26, 27. Am I right, Satkani?
That's right.
Yeah.
Okay, thank you very much. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you all for joining us on the call today. If you have any of your questions unanswered, please feel free to keep in touch with the investor relations team. The transcript of this call will be uploaded on our website, www.aurubindo.com, in due course. Thank you and have a great day.
On behalf of Aurubindo Pharma, that concludes this conference. Thank you for joining us. You may now disconnect your lines and exit the webinar. Thank you.